This is our Forex blog for April 17th, 2012, and I'd like to unveil something I briefly showed yesterday that I left running overnight. It is our Build Your Own Trend statistical tools, which let you set which of our best statistical tools to use and under which weightings and under which settings. So I have 15% weighting for 5-minute trend candles, 15% weighting for the 15-minute power index, what percentage of currencies are below or above their 15-minute bar average, and so on and so forth. And I also put this, instead of on a 5-minute chart, which is what we normally do our currency meter on, this is now on a range chart. It uses a 6 pips per bar chart so that if the market's dead, there's not a whole lot of bars. You can see from around midnight to 2:40, there's very few bars right here, versus this 30-minute period right here, there's about 6 or 7 bars. A lot more volatility. It gives you a lot more granularity and I think intuition when you need it, when the market's most volatile and most moving. And when it's not moving and it's not volatile, then one of these 6 pips per bar chart might take 10 minutes to form, or during the deadest of dead times might take 30 minutes. So it gives you a lot more an intuitive sense, and it allows you to set whatever weightings that you want. If you want super fast settings, you can create it. If you want super slow settings and you're more of an intermediate time frame trader, you like to hold trades for 3 to 8 hours or 10 hours, set these to fit your needs. Just to give you an idea of what it looks like here, and remember, it only works live. There's no way to line up all these different time frames on a range chart, which has no start and stop time. As you can see, this bar right here starts at 21:30 and 14 seconds, and the next one is 21:35 and 13 seconds. So it's about a 5-minute bar. The next bar was about 7-minute bar. So again, it's variable based on, when the market's moving a lot, there's more bars, you get more granularity. And it also lets you see if it's moving a lot. Let's say the dollar, you can see, is extremely weak. The daily trend shifted down, the weekly trend's down, the monthly trend just slightly up. You can see it fell for a considerable number of bars, and then it only had 2 bars up with significantly less strength than it had weakness. That's a trend that's very likely to reverse, and so as the weakness or the strength goes away here at 419, you might want to be looking to buy this against one of the stronger currencies. The euro, clearly the pound, very strong. So let's look at buying the pound versus the dollar. First of all, if you look on this 6 pips per bar range chart, range charts are just the most beautiful things in the world. You can use our intelligent trailing stops to get in, out. When all time frames line up, you tend to have nice trends. This one went from the low of 58.70 all the way up to the high. Notice it went to the second Fibonacci profit target. These gray levels are fib targets I do each night for my own trading, and I put it into the software so our traders don't have to waste 30 or 40 minutes of their time doing Fibonacci retracement, Fibonacci profit target analysis each night, which is, I've tried to teach fibs in the past, and some people get it, some don't. It's kind of an art. It's part art, part science, and I've done them for 13 years, so I'm very good at it. When you have a strong currency like this, there's a couple patterns you can look for to get into trades. One of them is a sideways rectangle pattern like this. And I prefer at least 5 range bars. This one has 1, 2, 3, 4, 5. So it had 5. It breaks out, went up a little bit, barely 10 pips, more than enough to move your stop up or to break even. And when you have a strong trend, after a 3 to 5 bar pullback, in this case you have 1 red bar, 2, 3, 4 bars. The first bar that goes green, you can buy it when it goes 1 pip above that bar's high, and you put your stop just 1 pip below the low. And so you can see the amount of risk you have here is less than 10 pips. You draw your fibs from the previous swing, and then in this case it's pretty easy. You have the first and second fib target. Notice it hit the 1.618 fib target to the very pip, and that's one of the reasons why I use it. And so you'd be in this trade, let's say at 59.17. Myself personally, if it goes sideways at the first fib target, I tend to get out of the first half. and then I'll either get out at the when the trailing stop gets hit, or if it goes up to the 1.618, that's usually where it's going to end. Notice this green line on the top. This is our containment bands. The 3.0 containment band, there's about a 95% chance, in my own opinion, from my own trading, the 3.0 band almost always reverses. You just have it set around the hourly moving average, 3 times multiplier, and it shows green. So when this green level gets hit, at and above that level, you almost always get a reversal. So if you got out of this at the green level right here at 59.60, that's fine. If you went to go short, you had a small loss. You short again right here when it goes underneath that bar at 64, came all the way down to 45. So, you can use that as a counter trend method. Look, you short here, you made a little bit of money too. Another one that was really strong today, and it really didn't get super strong until a little bit before 8, was the CAD. And at that time, the euro was no longer strong. It actually switched to weakness. So you could, after 8 o'clock, look to sell the euro CAD. Now look at this chart here. First of all, when it went from above to below the hourly, if you were watching this chart, this is where one of the ideal places to enter. Anytime it goes from above to below or below to above, if you went short right here, you pretty much broke even. You flipped, made a little bit, went short, and it kept, our trailing stop kept you all the way in until right here at the bottom. And the reason for that is we have an intelligent trailing stop. Sometimes it has very tight stop, other times it widens to make sure that the noise of the market doesn't get you out. If the momentum is on your side, it has a wide stop. If it moves statistically too far, we have a super tight stop. And you can see that's pretty darn good. It's probably the best I've ever seen it ever do because it got you in to the trade right here, 31.22, and out at 29.70. Huge profit on that trade. And when trades don't work, if you want to do a counter trend trade right here, notice you're out, short, small profit, and vice versa. If you wanted to trade the Swiss later today, which also became weak, versus the CAD, you certainly could have done that as well. CAD Swiss is very likely to go up. Strong CAD, weak Swiss. Let's bring this up here. And notice the exact time you had. The CAD became strong a little bit, or mildly strong a little bit before 5:30. The daily trend was up. The weekly trend and monthly trend were just slightly down. If the real-time trend's up and the daily trend's up, I don't care what the weekly and monthly do. But it switched up at a little around 8, the weekly trend. The weekly trend is much more important than the monthly because the monthly sometimes can take a few days of one-directional moves to switch. But nonetheless, right around here at 8. And this one was already showing weakness way back from 5:30. And you can see when it broke out here at 91.91, just exploded up. And our trailing stop got you out right here at 92.54. Very big move. And our currency meter pretty much made it obvious. You can see it. It was just incredibly strong after 9. And usually when you see two bars pegged at 100% strength, that's a trend that's likely to continue. Even if you wanted to jump on board this at 9 o'clock, the yen right here was extremely weak too. You could have bought it at 9 o'clock. And even at the end of this 9 o'clock bar right here, price is only at 81.31. It went up another 50-something pips. So even if you missed that first 5-minute bar breakout, you still had another 50 pips in the move. So the reason I created this range bar, build your own trend currency meter, and let me just show you what our older one looks like. You just get a feel for the intuition. Extreme weakness, almost no strength, and for a very tiny amount of time compared to the past. Same thing with the euro. Let's look at the regular one. It doesn't quite give you the same feel. There's only an hour of up or down move here, 15 minutes of up, versus the intuitive feel of just incredible amount of direction, because each of these bars is basically a 6-pip movement. So it's going down, 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 a tremendous amount, and only going up basically about 12 to 18 pips with very little intensity. It's just intuitively, in my opinion, and this is from trading with it yesterday and today, more intuitive. Because I have these side by side, I'm watching them both in real time. This is my workspace I use for class, but I have a workspace. I have 4 monitors set up, one 30-inch Dell monitor, two 24-inch Dell monitors, which I have right beside the 30, vertical, up and down, and then I have a horizontal 24-inch monitor above the 30. And I might replace that with another 30-inch, but I do have two speakers up there where their stands are, too wide to have a 30, so I just used one of the older 24s I have. But I don't look at the top monitor that much, so I probably might just leave it the way it is. But nonetheless, you can feel the intuitiveness here. Notice the pound. Strength, daily, weekly, monthly trend pretty much up. 1 bar of almost minuscule weakness. Same. This is a trend that's likely to continue, and it does. Let's look at the old currency meter in the pound. You see that? Just doesn't quite give the same feel. Using the methods that I normally used in the past, if you miss this first move, you see this. It's got about visually half the weakness of the previous strength. At 5:30, I'd be looking to get in this. And that only leaves an hour and a half of trend. Whereas with the new one, you can see quite a little strength, a little bit of weakness right here at 326. I might be looking, when I saw this get strong again at 326 right here, to get in right here. And notice that little drop off right here. No comparison, just all strength, even less weakness than before. And then when the strength comes back up, you got about an hour or so here as well. Notice the euro. The strength that you normally trade it with, and then a little bit of weakness here. Strength comes back, and once you see weakness followed by less strength, that weakness is likely to continue. This one has at least a monthly trend that's extremely, extremely weak. So 633 right here, weak euro. You might trade that against the pound, which is one of the strongest ones. Euro pound at 618 or so. You're looking to sell. It's right here near the lows. Normally, I do not like to sell it at the lows. I probably would not have taken this trade regardless if it was underneath the 2.0 band, but it breaks down, and you can see it fell, only about 10 pips because it hit our lower band, but those are 10 pips regardless. Let's see what else you could have traded it against. Also the CAD, weak euro, strong CAD, right around 618 earlier today too. Notice it's also going sideways when it breaks down right here, 3106. And even if when it came down to the lower red band right here and went sideways, you can see it fell 20 pips. You only need 10 pips per day to double your account every 2 months. A lot of new traders say, well, I want to make 30 to 50 pips a day, which if you really know what you're doing and you trade for 2 to 3 hours a day, I think especially with this new tool, is an achievable goal. But for a new trader that really, most new traders don't know at least 50 or 100 things they need to know. But just getting back on track, $2,000 account, 10 pips per day. After 2 months, it's almost double. Because we don't go up, we only increase the lot size by 0.1 lot, 1 mini lot. After 2 more months, it's more than doubled, doubled again, and so forth. End of the year, you're trading a tremendous number of lots. Obviously, this is the power of compounding. But from 2,000 to 258,000 in 1 year, getting to just 10 pips per day. So keep that in mind when you see trades in our class where, it might make 15 pips or 20 pips. Only an idiot and a fool and someone who doesn't know anything would think a 20 pip move is not worth their time. All right, so getting back to this, you can see the Australian, also very intuitive, very easy to see that it's strong last night. And when you have the pullback that has less weakness than strength, and it happens during a less of a time frame than the strength, as the weakness falls off, it's safe to assume that the previous trend is going to continue. 830 right here. At 830, the dollar's weaker than the yen. The yen had a lot of strength at that point. So I would, looking at that trade around 830, be looking to buy the Australian dollar at around 830. Let's bring up the range chart right here. Here's 830. Right here. It's going sideways, has a little bit of a pullback. You can clearly see lots of strength, almost no weakness. I like to either draw the trend line or uh, visualize it. A lot of times I don't draw it myself. When it breaks out right here, I would be long at the exact pip right here around 1.0369 with my stop just a pip underneath the low here. Very tiny amount of risk. Now this isn't the best trade in the world because you have the 20-day moving average right here. The dotted green line is the previous day's high. We have the 200-day moving average. Major resistance, and it was major resistance before. So you don't know if the trade's going to work. You get in this trade and it kind of goes up here and you can see it has less strength than before. You get out with a small profit. But look, 0370 up to 80, you have the potential of 10 pips right there. You bought this pullback right here, few pips. Bought this pull right here, you probably lost on that. And then when it breaks out, notice you draw your fibs on the last wave up. You also have my Fibonacci profit target levels from last night. I get out of first half right here. Whenever it hits a 1.3 and 2 and goes sideways, I get out of half. And then it came up and hit the 1.618. It's above the 2.0 white containment band. So I'm out of the second half right here. Out of half at 17. The other half at 04. The average X is probably somewhere up here around 08. You're in the, even if you got into this trade late when it broke out and made higher high right here at 86, you made 20 pips on that trade.